healthcare at home or mobile healthcare is one of the great revolutions happening, and this company gives you exposure to that. First off, read this disclaimer carefully. We're going to look at one of these very interesting themes under the zeitgeist, and that is healthcare at home. A very big move from the 52-week low average here, and not that far away from the 52-week high. And you can see that there are some stocks that are dragging down the averages. The company in this video will be BioTelemetry. They are in the heart and blood sugar monitoring business. BEAT is the ticker. So healthcare at home or mobile healthcare, basically the kind of healthcare that you can get while not at a hospital or a healthcare facility. That is a very powerful trend. People want to be mobile, have autonomy. So let's learn a bit about BioTelemetry. So improving the quality while reducing costs. Our remote monitoring technology has helped us build the world's largest cardiac data network, making care more accurate, comprehensive, and efficient. So here you can see, 4 billion heartbeats a day monitored, 1 million patients per year, 30,000 physicians refer patients to their products, $300 million invested in the technology and service platform, 50,000 monitoring devices, 1 million reports to physicians. These are like massive data. Leading provider in health management and remote patient monitoring. Here we can get some additional data here. So it is committed to leading the mobile and wireless medical technology industry. So this is a very good combination of tech, Internet of Things, and healthcare. Very powerful trends. Here you can see some of the history. Been a bunch of acquisitions. Okay, so let's first look a bit at the seasonality here of the stock. This is the percentage of months in which BEAT closed higher than it opened between 2008 and 2020. We are now in July, which is one of the best months for BEAT, and August is also pretty decent. This is a good time for BEAT. Let's compare it against, or maybe we should compare it against XLV, which is the healthcare ETF. Okay, let's go back. So here you can see the percentage of months in which the BEAT outperformed the XLV. So you can see that July and August, especially August, is historically a strong month in terms of outperformance as well. Okay, let's look at the charts. So this is all the data we have here for BioTelemetry. You could make the case that we're forming a monstrous rounding, cup and handle pattern. Monster cup, many years, then we form a handle. Okay, that's one interpretation of the charts. You can see that. Well, let's actually measure the move from the low here. It's a monstrous move, I can tell you that much. So from here to this high, that's 3,800%. But okay, that's a good gain. But this also shows you why you want to manage your position, because if you held on, you would now have 2,122. That's a good move, but of course you want to keep your profits. So we've had a major pullback down to this recent low here, minus 65%. So BioTelemetry, it's a huge mover, big moves. Then again, the gains have also been big. As far as cycle patterns, you can see that there is some cyclicality in the way it moves. Let's see whether the cycle patterns are consistent. Let's go here. I'm not entirely sure. Let's see. Look at that. Yeah, the cycle patterns, they do change every now and then. The rhythms change. There seems to be some cyclicality, but there's been frequent... every now and then the cycle patterns have changed their rhythms. but there is clear cycles, as you can see. Looking at the most recent developments, okay, so the reason why BioTelemetry is a bit interesting here is because many stocks are now at, all-time highs and have seen these monstrous moves, meaning there's a high risk of them pulling back. BioTel has not really had that big of a move. It's been a bit neglected. There's multiple reasons for that. We will get into it soon. But this is also an interesting opportunity because we are now pulling back to an extremely important moving average, and that's the red 200-week moving average. We have resistance here at the 100-week, possible support at the 200-week. So this right here is a very interesting zone. Yes, we have made lower highs and lower lows, so there's a bit of a bearish sentiment for sure. But the bears have already seen such a... they have caused a massive pullback. Hence there is a very real probability here of support coming in, and that would be a very good opportunity to get some exposure to BioTelemetry. Definitively that's a level to keep your eye on. You could make the case that we are forming also a head and shoulders pattern, shoulder, head, shoulder, but then again, the bigger pattern here is a cup and handle. And the cup and handle, of course, would be, that's a rather bullish pattern. And the industry exposure here is, it is interesting, and we will get into some other data soon. Okay, so the RSI is in the neutral zone. The accumulation distribution line is actually it is relatively high here, if you compare it to the high back here. So there are certainly some buyers that have been loading up on positions. Could be some smart money, who knows. There is a 26% positive correlation with the S&P 500, which is a very weak correlation. That's actually good. Let's load some moving averages on the daily data points. And here it gets even more interesting when it comes to moving averages. You can see here is the red 200-day moving average. It is negative. Now it is turning positive. That's interesting. That's very interesting. We are finding some kind of support here. We do have some resistance from the 20-day moving average. It would be nice to be close above it. But these are like levels to watch out for. Support here, breakout above here. That could very quickly create some momentum to the upside, and we could get that cup and handle pattern. Okay. It looks very interesting from the technical standpoint. Let's look at some additional data here. So you can see that there are options available. It is shortable, but I'm not sure I would want to short it at these levels. The bears have already sort of done their thing. Market cap is not that big, 1.6 billion US dollars. You could certainly make the case that there is more growth opportunities. I've got some fundamental data here. What I like to look at is the price targets. Currently the stock is trading at $45.56, but the average analyst price target is $61. That's a whopping 34% above the current level. You could certainly put that in the bullish data case. Looking at Saks.com, they do have a number for sell on BioTelemetry. Though they do have a C-value score. A C-value score for this kind of high-tech healthcare stock. That's quite interesting. Internet of Things healthcare. So C-value, good. B growth, good. A momentum. So the style scores here are actually pretty darn good. There's no dividend, but that's not any surprise. You simply don't expect dividends for these kinds of stocks. So the industry rank, top 38%. The sector rank is the top 25%. And given that there's been some very good developments here, you also got to question how long it will be a number for a sell. Of course, if Saks changes the Saks rank, that would also be pushing the stock up. So to sum up my take here on BioTelemetry, there's multiple reasons to be bullish. I think there's more reasons to be bullish than to be bearish. it's coming down at a very interesting level. The industry is very interesting. The sub-industry also, given that this is a category unto its own. Yeah, I like it. But it is definitively speculative. It's a big mover. You saw the percentages. So this is, you know, something that it's for people with a bit of a stronger stomach. But then again, I mean, it was almost like 4,000% off the lows. So yeah, very interesting stuff. Okay. Okay, now, I thought it was going to freeze. No. Okay. Let's now look at the S&P 500. I'm trying to keep the videos a bit shorter, to try around 15 minutes, because the YouTube data suggests very strongly that it's around 15 minutes that is the ideal length for my videos. By the way, you can of course suggest stocks for me to look at, and ETFs, though preferably stuff I haven't looked at before, at least recently. Okay, so the S&P 500 futures. Okay, so today is an interesting day here. I mean, the bulls are back in business, because we did have these lower highs and lower lows. So far, it certainly seems like the bulls want to break out above this resistance level here. So I mean, this is still very early. It's in the pre-open market, but yeah, the bulls they really do want to see some improvement here to get above these prior resistance levels. And that, of course, could build momentum to the upside. Then again, when you look at the internals, it is pretty clear that there are a few strong stocks moving the market upwards. There's a very large number of stocks that are just weak. Okay, so in the same sense that we have had this phenomenon of the elites becoming more and more powerful in the overall human population, you see the same thing in stocks. There's a very few stocks that are sort of like taking all the money, while many of the other companies are just really languishing. But the way these indexes works, also if you look at the S&P, now the Nasdaq, they have a heavy weighting towards, you know, the bigger stocks. Okay, let's look a bit at some seasonality here for the S&P 500. Like, oops, buy like that, go. Because the thing is that if you look at the history here, the long-term history, you can see that July, basically this period here is a bit dicey. You see it also looking at the more recent data. The strongest periods are quite clearly here in spring, heading towards the summer times, and autumn heading towards winter. These are the solid months. But in this region here, historically you can see that it's a bit more dicey. Sometimes it's up, sometimes it's down. Hence, even though we are seeing, as we saw in the S&P 500 futures, there is this bullish sentiment, and that's something that we have to, of course, respect. There is also this caveat that, you know, we are in a period that's been with some issues. Here we have, you know, the contagion updates. You can see here, you know, this is the URL. So let's load some data here. Look at the daily cases. You can see here that we do have a pretty clear rising curve. And, you know, the theory was that when the summertime came, the contagion wouldn't spread that much. Quite clearly, it is in an uptrend. I mean, if this was a stock, you know, you would be like, oh, buy the dip. So this is definitively an issue. And there's a lot of data about the contagion that is disturbing. It's pretty clear now. I mean, it is widely accepted that it certainly seems to have spread from a lab. So it is not a natural contagion as such. It is manufactured. Actually, one of the key researchers in Norway in the field. He has been pretty clear that he has studied, the microorganism. I have to use those words because if I use other words, then the algorithm will pick it up and start, freak out, because they really do not like it when you talk about this thing with this name. Okay. Anyway, he has been pretty clear. He did an analysis of the contagion, and the microorganism has aspects of it that simply cannot come about naturally. It doesn't make any sense. The good news is that it isn't as bad as it could be. The problem is that there's a high risk at this point that it's going to be endemic. So we go from a pandemic to endemic. Endemic is basically that it will be with us for the foreseeable future. Something to think about is that influenza, that virus, has been with us for 6,000 years. 6,000 years, and there is no cure whatsoever. Every single year it comes back, another variant, and it wreaks havoc. You can of course take a vaccine, but the vaccine only will help you against the most common variants, and there are many variants. Hence, yes, this will be with us for possibly a very, very long time, which means that some of these stocks in the pandemics theme, they have gone up a lot, but there's a high probability of these ones, some of them at least, having very big pullbacks, if, as is very likely, that we will realize it is much more difficult to create cures and vaccines than what people think, because most people on Wall Street are not experts in the medical field. Whatever you do, of course, don't fight the trend, and may the trend be with you.